This is Your Money, Your Wealth.
Welcome to another edition of Your Money, Your Wealth. My name is Joe Anderson, president of Peer Financial Advisors. Of course, I'm with the big man sitting right over there, Big Al Clopine. Got a great show lined up for you today. If you're a little worried about losing a little bit of money in the overall markets, we got a great strategy to help you preserve your capital. And most of you are not doing this. No, it's not a tricky investment play. It has everything to do with taxes. So that's what's on my mind today. Hey, when you go into retirement, one of the biggest expenses that you will have is the amount of money that you pay in tax, depending on where your money's held. There are $22 trillion sitting in retirement accounts, 401ks, 403bs, TSPs, and the like. When you pull money out of those accounts, you are subject to ordinary income tax. The IRS established these accounts under ERISA in 1974 when the top marginal rate was 70%. It's almost half that now, and you got baby boomers retiring in droves, taking these dollars out, and the IRS is salivating right now of how much tax they're going to collect. If you're worried about losing money in the markets, think again. You're going to lose so much more to taxes. To bring in the conversation, let's bring Big Al. Big Al, taxes, huge expense in most retirees' balance sheet. So let's talk about some strategies on how we can help them reduce the taxes, because if they reduce tax, guess what? They can reduce the risk in their overall portfolio.
Well, that's absolutely right. And when you think about it, if you can save money in taxes in retirement, then you can make your money stretch a lot further. And one of the best ways to do this, one of the best strategies that we've been given probably in decades from the IRS, is the Roth IRA.
Roth IRA is a retirement account that is really awesome. Faux show.
It's pretty amazing, as that video clip just said. So why we're going to talk about the Roth today is if you can understand how a Roth IRA works, you can save significant amount of taxes through your retirement. So right off the bat, we'll get into what is a Roth IRA, and it's just a retirement account, special kind of retirement account that grows tax deferred. We're going to talk about two different ways to get money into the Roth IRA. One is to do a contribution from your earned income, from your salary, and another is to do conversions. You can actually convert some of your existing IRAs and 401ks to a Roth IRA. All future growth income principal is tax-free. And then finally, we want to get into some myths, because a lot of you are not doing Roth contributions or conversions because you're thinking you're confused about who benefits and who doesn't. And we're going to go over that. And Joe, I think if our viewers understood what was available with the Roth IRA, more and more people would be doing it. And a lot of people have caught on, but it's relevant for almost everybody to be considering it these days.
Well, you take a look at the Roth IRA. They've been around since 1997. And so do you have a Roth IRA or a Roth 401k or Roth 403b or TSP looking in your overall retirement accounts? That's the first question that you have to ask. Do you have availability to one? Most of you do, but you don't necessarily know it, or you might think that it doesn't make sense for you. We're going to dispel those myths right now to make sure that everyone at least takes a look at it, because there is no better rate than zero. Any dollar that's in a Roth IRA grows 100% tax-free. Think about it. When you need the money the most, that's when you're in retirement, because you have to create the retirement income on your own. And if you don't have to pay taxes on it, that's a huge deal. So now it's just taking a look, how can you maximize it? How are some ways to get money into this overall account so you can enjoy tax-free income for many, many years to come?
Yeah, and Joe, let's start with what is a Roth IRA. So right off the bat, I would say it's a special type of retirement account where you don't get a tax deduction up front. That's a little different than a regular IRA or a 401k. There's no tax deduction, but what does happen is all future income growth and principal is 100% tax-free. And this is where you can really start to make a difference with your retirement, because if you think about this, if some of your income in retirement is tax-free, you can stay out of those higher brackets. Maybe you can have less of your Social Security taxed. For some of you high income earners, or maybe you have a lot of investment income, you can stay out of the Medicare surtax and all kinds of things by having some of your income as tax-free. And Joe, right off the bat, we get this question a lot, which is, what does a Roth IRA pay?
Yeah, so is it an investment? Is
Right.
it not an investment? Is it more risky than the overall IRA? What are the investment options? Well, if you take a look at a Roth IRA, it's just like your 401k or your 403b or any other retirement account. You can invest in just about anything that you would like. Mutual funds, stocks, bonds, CDs, cash, anything but collectibles and life insurance. If you want to buy real estate, if I look at a single family resident that I would like to purchase, a tenant in common, an apartment building, you can buy any asset inside a Roth IRA. Now, the Roth IRA, all of those assets that are in that account will grow 100% tax-free. Okay, so now just think about this just for a second. When they came up with retirement accounts, so you're putting in your $200 a month or maybe $500 a month or whatever that your contribution is. So you're getting a small tax deduction along the way, right? So you're saving a couple of bucks in taxes. Most of you didn't take the savings that you did in taxes and saved it, right? You spent it. Now you've accumulated this large sum of money sitting in your retirement account, your 401k, your 403b, or whatever it is. Now think about this. Every single dollar that comes out of there is taxed at ordinary income. So your $200 contributions over the last 10, 15, 20 years has now accumulated to $200,000, $400,000, $500,000. Every single dollar comes out of that account taxable. If it's in a Roth IRA, so you're putting in $200 a month into the Roth IRA or Roth 401k. You don't get the tax deduction, but now think about you have $400,000 or $500,000 sitting in those accounts. You pull every single dollar out of there, zero tax. There is no tax. So if you're not looking at a Roth IRA contribution, a Roth 401k contribution, or a Roth IRA conversion, I think you're missing the boat when it comes to true tax diversification. Because Al and I believe that this is the best gift that the IRS has ever given us.
Well, it is, and let's start with who can contribute. So right off the bat, I would say that you have to have a job or be self-employed. So that's who can contribute. So in other words, you must have earned income. But there are no age restrictions on contributions.
Well, I suppose a 5-year-old.
Well,
there's some child labor laws.
Well, they have to have earned income. Maybe they're a model.
Right, well, but you get this. Okay,
Yeah.
so hey, I want to start a Roth IRA for my child. All right, well, how old's your child? Well, 3 years old. Okay, well, the child has to have earned income.
They have to have a job.
They have to have, yeah.
Right,
so you
right,
just put them to
right.
work now. Right?
Yeah, no, not exactly. And in terms of the amounts that you can contribute to a Roth IRA, $5,500 is the number. That's the maximum. Unless you're 50 or older, you get a special catch-up. You can actually do $6,500. Now, there's something called a Roth 401k. Some of you guys have plans, 401k plans with your employer that has a Roth option. So you can put dollars into the Roth 401k. And the amount there is $17,500 or $23,000 if you're 50 and older. And get this, for some of you, you can do contributions into a Roth IRA and a Roth 401k both, as long as you're under the income limitations.
Yeah, this is a huge deal. And I think a lot of employers now, I think the last study that I read is like close to 60% of large employers will have the Roth provision in the plan. So here's what you have to do Monday morning is you have to call HR and say, hey, do I have a Roth provision in my 401k plan? Can I start putting dollars into a Roth per se inside your plan through your employer? You can put a lot more money into those plans than you can in the Roth IRA, and there's no income limitation. So if I'm making $200,000 a year, and if I have a Roth provision inside my 401k plan, I absolutely can put in the full $17,500 or the $23,000 if I'm over 50. So it's a big deal. That's what we're going to talk about. Now, once we get back from the break, we want to talk about another way to get money into a Roth IRA, which is probably even more confusing. It's called a Roth IRA conversion. It's taking existing dollars that you currently have inside your retirement accounts, taking some of those dollars out and putting it into a Roth IRA and having all of those dollars grow 100% tax-free. If you want to get a free tax review, call our number right now. What we're going to do is to see what makes sense for you. If you think, hey, you know what, I have a lot of money sitting in these retirement accounts and I want to find a strategy to create tax-free income in retirement, here's the number to call, 888-994-6257. Just getting started. Don't go anywhere. Show's called Your Money, and it's Your Wealth. Welcome back to the show. Show's called Your Money, Your Wealth. Joe Anderson here alongside Big Al Clopine. Thanks for tuning in each and every Saturday, 11 to 11:30. Hey, listen, now is the best time to do tax planning. Most of you wait until April. You have to get the tax planning done. This strategy that we're going to talk about has to get done before 12/31, before the end of the year. So come into our office and get a tax strategy in place. 888-994-6257. You can sit down with Big Al. He'll take a look at your overall tax return, your overall situation, and we can come up with some ideas to help you from a tax perspective. Call the number right now. Everyone that calls within the next half hour is in for free. Let's go to the true-false question.
At 70 and a half years of age, the IRS requires that I start taking distributions from my Roth IRA.
That's false, definitely. That's one of the biggest advantages of a Roth IRA, because in a standard IRA or 401k, you're going to have to take required distributions. What does that mean? The IRS wants you to take money out of the account for you to pay their tax. With a Roth IRA, guess what? You don't have to take the money out. That money can parlay tax-free forever. It's tax-free for your life. It's tax-free for your spouse's life, and then even more, it's tax-free for the kid's life. When they came up with this account, the Roth IRA, back in 1997, they wanted to call it the American Dream IRA. But guess what? Senator Roth, he's got an ego, and so he put his name on it. So tax-free is pretty good in my book. What do you think, Al?
It's fantastic.
It's fantastic.
That's the best. And
Roth, let's hear it for tax-free.
ROTH, Roth IRA. Anyway, I would say this: if you can create some tax-free income in retirement, this is how you're going to save money. And income taxes are the highest expense for many of you, and particularly those that if you've saved money in your 401k, your IRA, you've saved money outside of retirement. Maybe you have a rental property, maybe you have a business that you're going to sell. If you can create some tax-free income, you can live in a much higher tax bracket than you're actually paying, because some of your income is tax-free. So, Joe, before the break, we talked about contributions, how to contribute to a Roth. Now, we'll get into conversions next, because this is the big one. This is kind of, the contributions is like putting a little teaspoon in. A conversion, you can back up the dump truck and put in as much as possible.
Yeah, put in a ton of money into a Roth IRA with a Roth IRA conversion. It's a big deal. When you take a look at a contribution is $5,500, but what a conversion is now you're taking money from a retirement account, your IRAs, your 401ks, and then you're taking some of those dollars out and then you're converting those into a Roth IRA. For instance, if you take $10,000 out of your retirement account and move that 10 grand into a Roth IRA, yes, you have to pay the tax on the $10,000, but if that $10,000 grows to $20,000, $30,000, $50,000, you pull everything out 100% tax-free. So the conversion strategy plays much more importance in your strategy as you get older, because most of you have all of your money sitting in retirement accounts where you have very little money sitting in Roths. Now it's coming up with the appropriate strategy to make sure that you get that tax-free income.
Right, exactly. And so when you think about it, so the conversion, there are no limits as to how much you can convert. You can convert $10,000, you can convert $100,000, you can convert $1 million if you want to. The only thing is, you got to take a look at what tax bracket you're in. That is what's going to really decide what's appropriate for you. But let's talk about who actually can convert. And this is where it gets kind of exciting. Well, this is anyone that has an IRA or a 401k, any age. I don't care if you're 20 years old or 97 years old. You can do a Roth conversion at any income level, and you can be working or retired, which means anybody that has an IRA or 401k can do a conversion. And I'll tell you this, everybody that has a retirement account should be considering a conversion. You got to take a look at your line 43 on your tax return. That's going to tell you what your taxable income is, and then you can look and see what tax bracket you're in, and then you'll know if you do a conversion how much tax that you'll need to pay.
So let's illustrate this. I'm going to go over to the whiteboard once again and then just try to make sense of all of this tax jargon, because it's important. You want to make sure that you look at a few different things. So now when you are converting or you're contributing, remember, when you're saving money or investing money, you can invest in different accounts, and each of the accounts are taxed differently. And so you got a couple of different pools of money that you can invest in. All right, you have tax-free money. That's what we've been talking about all day today. Tax-free, Roth IRAs, Roth 401ks. Every dollar that comes out of here, 0% tax. There is no better rate than zero. Here's where all the money is, though. The tax-deferred accounts, the IRAs, the 401ks, the SEP plans, the Simples, 403Bs, 457s, the TSPs. The list goes on and on and on and on. All of the money is sitting in these accounts, and when you pull money out of here, guess what? You're paying the piper at the highest rates. So to get money up here in this tax-free environment, we looked at a contribution. So if you're looking at a straight IRA contribution, that number is $5,500. Okay, if you're over 50, you can put in another $1,000. Okay, $6,500. If you're married, double that up. So $13,000 if you both over 50. Now, if I have a Roth provision in my 401k, make that $17,500. And if you're over 50, $23,000. Okay, so now I can put in $23,000 into the Roth 401k plus $6,500 into a Roth IRA. Now you're really jump-starting your tax-free growth here. Here's a very important key. Now, with all of the money that you have sitting here, here's a technique that you can start taking money and moving it up into the tax-free arena. That is called a Roth IRA conversion. You have until December 31st to do this. So do it now. Don't wait, because you have to get it done in the calendar year. So if I want to take money out of the retirement account, I can now move it up here. It's called a Roth IRA conversion, but here's the downside. I have to pay the tax. But you're never not going to pay the tax. I'm a very simple person. I'm from Minnesota. There's a lot of farms in Minnesota. Think about it this way. Would you rather pay tax on the seed or on the harvest? Right? Of course you would rather pay tax on the seed, right? And then the harvest blows up and builds this nice big nest egg, and every single dollar comes out of their tax free. Now, if the best part about this, here's the tricky thing, is that I have to do the conversion before the end of the year. Okay, but you pay taxes on it next year when you do your taxes in April. Okay, so now the IRS allows you to recharacterize. So any dollar that you move up here into a Roth IRA, you have to get that done before 12/31, but you can always put it back. You can say, you know what, never mind, I don't want to do it. I don't want to pay the tax. Maybe I lost money in the account. Maybe I got a bonus at the year end where it pushed me up into a higher tax bracket. This is key. This is the best part about it. You can always undo it. If you go to Vegas and put everything on black and you spin the wheel and it turns up red, you can say, nope, I'm just kidding. Give me my money back. It's the same concept. Every dollar that I put up here, I can put right back. No harm, no foul. It's a redo. It's an undo. So you have until next year to worry about it. You have to get it done before 12/31. So I encourage everyone that is watching this program to call their CPA, to call their advisor, to say, hey, does this make sense? What are some of the strategies that I should be looking at? If you've never heard of this before, I would encourage you to find different professionals that know this stuff. If you want to call our office, Al and I will be happy to sit down with you, or any other of the fine professionals at Pure Financial Advisors, to do a tax review. What strategies are you doing before year end? Here's the number, 888-994-6257. That's 888-994-6257. Now, when we get back from the break, I'm going to spend a couple more minutes on this whiteboard, because then I want to talk about a strategy that you can utilize the time value of money and also the IRS recharacterization rules. It's pretty cool. Don't go anywhere. The show's called Your Money and It's Your Wealth. Hey, welcome back to the program. Joe Anderson here, President of Pure Financial Advisors. Big Al Clopine, of course, is with me. Hey, thanks for tuning in each and every Saturday. What I'm going to encourage you to do is try to get some more information and education, empower you to really make really good decisions with the money that you've saved up. I teach a retirement planning course all over Southern California. Go to yourmoneyyourwealth.com, yourmoneyyourwealth.com, and figure out where is the college that I'll be next. It's like find Waldo. You'll find Joe. I'm all over the place. San Diego State, USD, Cuyamaca College, Grossmont College, Maricosta College, and Oceanside. If you want to learn a strategy to figure out how to do this on your own, go to this retirement planning course. We'll pick up the tuition because we really want to make sure that you get the information that you need. If you Google retirement planning, you'll be stuck on the internet your entire retirement. So go to this class, 6 hours of really good times. I'm telling you, join me, go to Your Money, Your Wealth, and figure it out. Let's go to the true-false question to see how smart you really are with your money.
If I have a 401k with pre-tax and post-tax dollars, I can roll the pre-tax dollars to a regular IRA and the post-tax dollars to a Roth IRA. What do you guys think of that? The answer is absolutely true. And this is brand new. This is absolutely brand new. As about 2 weeks ago, maybe 3 weeks ago, there was new legislation by the IRS that said exactly that. If you have a 401k that you have normal contributions, you got a deduction. So that's pre-tax. You can roll that to a regular IRA just as normal. But some of you have plans that allow you to put extra money into your 401k. You didn't get a tax deduction. That's called post-tax dollars. You can actually take those post-tax dollars and convert those directly to a Roth IRA. And not only are those dollars tax-free in the future, but all the growth in income is tax-free as well. This is a big deal. If you have a 401k with post-tax dollars, make sure you talk to your advisor about that.
Huge, huge, Al. When you look at this, this is probably some of the best news that came out of the tax legislation this year. And what he's really referring to, again, is that we're taking money out of your tax-deferred accounts and we're moving them directly into a Roth IRA forever growth, 100% tax-free, okay? So getting money out of here into a Roth, you do have to pay the tax, but there is no way around the tax. Now, one of the things we talked about before the break is that if I put money up here, I can always undo it because remember, you have until 12/31, the end of the year, a couple more months to get this strategy done. So I encourage you to do it now. But here's the deal, is that let's say that I do a Roth IRA conversion, and this did it again on me. Well, look at this on the fly, Al. Look at that.
Let's see how well you do.
See this. All right.
Not bad.
So now we have, let's say, $50,000 that I did a Roth IRA conversion. This goes into my Roth IRA tomorrow, okay, or Monday. So $50,000 is in the account. I have until October 15th of 2015 to make up my mind. So I convert $50,000 today. I have all the way until October 15th of next year to figure out how much of this $50,000 I want to keep. It's huge. That's almost 12 months of growth that I would have in this account before I decide, do I pay tax? Because of that rule, I want you to do this. I want you to convert 2 separate Roth IRAs, 2 different accounts, $50,000 a piece. Maybe it's $5,000, maybe it's 10. This is just an arbitrary number. Now, because I can invest these differently. One is going to be very safe, okay, in fixed income, bonds, CDs, cash. The other one is going to be in stocks, right? I don't know what the market is going to do. So I can leverage the time value of money, okay, and also the recharacterization rules. So now if it's in stocks and the stock market goes on a run, this $50,000 is worth, let's say, 60 grand. I only pay tax on 50. I only pay tax on 50. You do this every single year. You can leverage the amount of money that you get into the Roth IRA, and you can always put the one that is a lower balance back into the standard IRA. Let's go to a couple myths, and then Al, we got to get out of here.
Yeah, we're running late, but I will say that a couple of the myths that we hear all the time is I can only put $5,500 into a Roth IRA, and that's false. First of all, if you're over 50, you can put $6,500 in. And the second thing is you can, if you have a Roth provision in your 401k, you can put $17,500 or $23,000, and anybody can do a Roth conversion. So in that case, there is no limit. You can convert as much as you want. So for many of you, there's ways to get a lot of money into a Roth IRA this year. The second one, Joe, really quickly, is I can't touch the money for 5 years. And that's not true. On a contribution, regardless of the age, you can touch the money at any time. But when you're doing a conversion, there's special rules whether you're over 59.5 or under 59.5, so pay attention to those. But you can always get your principal immediately on a contribution.
I mean, we're just scratching the surface with this type of planning. So join us, come to our office, have Big Al, myself, and the other fine professionals at Pure Financial Advisors take a look for you at no cost whatsoever. Here's the number one last time, 888-994-6257. Call the number right now. You have it till the end of the year to get this strategy done. For Big Al Clopine, I'm Joe Anderson. Thanks so much for tuning in. You're watching Your Money, Your Wealth. Have a great weekend, everyone.